Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwibank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets and analyse the issues impacting the Kiwi economy. Let's get into it.
Okay, welcome back to the pod and welcome to Mieneke, who after this episode will be, I think, our most featured guest on the podcast.
As she should.
And we're not shocked by it. It's always so good to have her on. Of course, with Mieneke on, we'll be talking and discussing the world of currency. We've just published our FX Tactical, which is a really cool publication that we do in collaboration with our financial markets team. And I think for this one, context is probably key because when we were writing it, the Israel-Iran conflict was very much in play, but now it's been a week. We're recording this episode and the ceasefire has been announced and it still seems to be holding. So there's been, I think, quite a round trip in a few, key assets, key commodities, like oil as well. And to actually quote the tactical, we said, if we had spent the last 3 months deep in the Himalayan mountains protecting endangered tigers, we would come out oblivious to market moves. But if you just gave us the headlines from the first half of the year, pretty much where there's been so much volatility and risk off, kind of headlines, you'd think that the Kiwi would be kind of trading at around 50s. But here we are sitting with the Kiwi pretty close to breaching 61 cents. So Mieneke, I guess my first question is, how do you square this circle? How do you kind of, consolidate or put these, what you think would happen in textbooks, what they tell you to do, but what we're seeing in practice?
Sure. I mean, that's exactly right. I think if we had seen all of that play out or you gave the headlines, then you would see the Kiwi lower, as those headlines essentially are telling you that it's a risk-off environment. However, I think in a nutshell, I would put it down to the US dollar having quite a lot of weakness of late, and that's seeing the Kiwi dollar trade higher than it otherwise should potentially. Our own economic environment is not stellar as well, so that should have also seen the Kiwi lower, but it's just not happened.
So what are you seeing that kind of puts that theory of the US being typically your safe haven? What kind of moves are you seeing that kind of counters that?
I guess there's just so much uncertainty around the US economy itself, and you've got a lot going on. You've got Trump, for starters. Initially, when he first came in again in his second term, that was actually seen as US dollar positive, largely around his, political, how would you call it, like his strategy around US first policies, deregulation, spending, etc. So the US dollar actually lifted initially. So the first part of this year, we had the Kiwi down at 55 cents, which reflected that higher US dollar. But that's turned, and quite dramatically so. And a lot of that is around the US fiscal policy as well. And just, people don't know what's going on. You've got, massive debt issues that they have as well. And just all that, kind of uncertainty that Trump has. We were talking offline before around we just don't know what he's going to do next. There's an element of a lack of faith perhaps in what he's got to say as well. And that's just seeing the US dollar kind of lose some of its safe haven status too.
And are we seeing that kind of anything funny happening in US Treasuries, JK, as our quote-unquote rate strategist?
Yeah, we are. We've seen a little bit of diversification out of dollars, but not a lot. Like if you look at the yield on Treasuries, quite low, right? In the sort of low to mid fours for a 10-year Treasury. That's pretty much bang in line where you would expect it to be given your long-term expectations of growth, inflation, and then something called, risk premium, which kind of goes up and down. It's risen a little bit recently. Doesn't concern me at all. Like if we'd seen a dumping of dollars, right, they have to dump their treasuries basically, you would see those interest rates rising quite rapidly and steepening. You'd see that 10-year rate go from the low to mid fours into the low to mid fives. And it's that sort of move that you start sort of it becomes negative feedback, right? High interest rates, high burden on the debt that Mieneke mentioned. But we haven't seen that. I think it's been a diversification out of dollars rather than a dumping of dollars.
It could be the fact that we saw so much, as Mieneke was saying, how America looked really strong at the end of last year and forecasts for the US economy looked really strong, that you saw so many flood into US equities. I think there was a big rally toward the end of last year. But then maybe this is more of a correction of that behavior, not necessarily we're completely forgetting about US dollars or US assets.
Yeah, well, US equities are still, like, they've bounced right back.
Yeah, that's true.
Through this Liberation Day. But I do think, to Mieneke's point, you do have international investors looking at the US going, is it really the safest of safe havens? And they're questioning that. My answer is, well, as long as they've got the largest military in the world, as long as they've got the largest navy in the world, which dominates the seas, well, actually, yeah, they're going to be the reserve currency, like it or not. But it doesn't mean you can't diversify out of it. And it also makes me laugh when you look at textbooks and say the risk-free rate. Risk-free? Really? Is the United States? No, they're not risk-free.
Yeah. And then I guess with, questions or doubt kind of creeping in on the US's status as a safe haven, are there any other assets that are benefiting from that? Think about the Swiss franc. They usually do quite well in risk-off times as well. Are we seeing any moves in that space, Mieneke?
We have seen some positivity for Swiss francs and for the yen, but they have some of their own issues as well, particularly Japan, where there's been some, question around the bond market and their monetary policy settings as well. There's perhaps a little bit of doubt as to how far the Bank of Japan will actually lift interest rates, for example, although the expectation is that they will because of inflation. But yeah, we've seen the euro benefit quite a lot. And I guess there's a lot of kind of speculation as to whether or not the euro could potentially become another reserve currency. I think at our last tactical chat, we talked about defence spending in the Eurozone as well. So that gave quite a bit of a boost to the euro. And I guess that's just carried through a little bit as well. US tariffs the whole tariff situation has also just put a bit of a dampener on expectations for the US economy. And that's coincided with that lift in the euro. So we have seen the euro come through stronger, and of course there's a correlation between the US dollar and euro around the basket or the DXY, with the euro being the largest component in there as well. So when you see a bit of a lift in the euro, that's going to pull the US dollar back a little bit too. So certainly seeing some strength in the euro, but I think you're right around questioning the reserve status of the US dollar. I think a lot of it is purely speculation. Maybe more of it is around the US economic outlook as well.
And I'd also just, remind listeners that 60% of global reserves are held in dollars and 20% are held in euros. So I think euros deserve more than 20%. And maybe that 60% in dollars comes off. But I hate to remind everyone about pigs. I don't know if you've heard pigs recently, but 12 years ago they were very front of mind, pigs being Portugal, Italy, Greece, and Spain. Greece was the Grexit. And, there were some very serious strategists and politicians that were worried that was going to be the end of the EU. So, and they still think that the EU is under threat over the medium term, just because there's no fiscal union. You have countries like Germany, which are clearly doing really well with such a weak currency in the euro, and then you got countries like Italy that are clearly struggling with such a high currency being the euro. So Europe is not that safe.
No.
It has its problems.
It has its problems.
Well, I guess going down the list, what are the other alternatives to the gold? I mean, the US dollar as being, a reserve currency.
You just said it.
There are no
I know,
alternatives.
subconsciously you just went gold. Yep.
Oh, yeah, I did. Yeah, I guess there's that. The other
Other currencies, I think, you would know, Mieneke. What are the other currencies that you jump into?
I guess you've got, Chinese yuan as well. And other emerging market currencies, which might become, more of a headline in future. I think the key takeaway as well, though, is that a lot of this is, sometime in the future, but it's going to maybe become a talking point a bit more often.
So rattling them off, you're trying to get out of dollars, you're going into euros, maybe a little bit of pounds, but pounds, they had a double notch downgrade during Brexit. And then I guess you're starting to think about Asian currencies, fair enough, but kind of hard with the restriction in their capital markets. India pops to mind as being the China of the next 20 to 30 years. So I'd buy into that for sure. Gold is another asset that you mentioned. Did we say Swiss francs?
Swiss franc.
Yeah, we said Swiss francs.
Yeah.
There's a few things, and I think money is also looking for that disruptor.
Your cryptocurrencies, yes.
Here we go. FX trader, would you be punting Bitcoin and whatever other coins are out there?
I think the key word there is punting. So, it's, worth having a look at other alternatives, etc., or keeping an eye on how those track. But, personally, I think there's a lot of risk there. So hence the word punting. But yeah, it's definitely an interesting development to keep an eye on for sure.
It's funny though, if you think about cryptocurrencies, correct me if I'm wrong, people think of them as an asset, not a currency. So it's not like I'm selling this to buy this and I'm using this to buy something. It's like I actually think Bitcoin's going to $1 million, so I'm buying it. It's a speculative punt at this point.
And I guess it's all about liquidity, isn't it? And, how soon you can liquidate that position. So in a way, yeah, probably more of an asset in a lot of regards. Personally, I'm not a huge specialist in cryptos, so I'm not the person to ask. I'm sure there are people out there that, are much more abreast of what's going on in that world. It's just something I keep an eye on in general, I guess.
Anything else that you look at that we should be thinking about?
I think it's just mainly at the moment, it's just those dynamics between all of the fiat currencies that we've got. It's always a moving feast and kind of a rich tapestry of quite complicated issues. So yeah, I think the US dollar reserve status is not really in question, but its safe haven status has been questioned a lot of late. We still saw it lift on the back of the recent Middle East flare-up, but it was perhaps lacking in sort of proportionality to the risks that were involved. But that's also happening on a backdrop of all of this tariff noise, which has so much still to be worked out. And yeah, that global growth outlook, etc. It's kind of like, to some point, everyone's in the same boat. There's not that many countries that are kind of outperforming anyone else when you look at it, from that perspective. You've probably noticed it yourself as well, and the recent IMF update around global growth outlooks was pretty woeful as well. So yeah, where is the safe haven? Where is the gold other than gold?
Did you hear that? Rich tapestry of complicated. I think that's the title of the podcast.
Mieneke is a reader, so she's quite well read.
Sometimes I don't speak well though, so.
I guess putting that all together then, because part of the tactical as well is to kind of give us a 3-month or even a year-end view of where the Kiwi's going. And we were saying how when we're sitting down to write with this tactical, we pretty much saw our whole year-end forecast condensed in just 6 months. What's our kind of thinking now with so much uncertainty, so many dynamics to kind of consider? Where are we thinking the Kiwi will travel from here?
Well, at the moment, the Kiwi's sitting around 60 cents. And, there's risks upside and downside as as always, I think in the very short term, within the next couple of months, there's a good chance that the Kiwi will target a key level of 61.25 through 61.50, and if we see that, if we see the Kiwi have a sustained break above that, then that kind of opens the door to the 63.75 level, and that's entirely possible. But it would rely on there to being, a continued sell-off on the US dollar, which is entirely possible, of course, with everything going on. Last week, we saw Trump announce that he might actually have his new Federal Reserve chair for May 2026 announced as early as September or October. And that's seen markets take the view that US dollar rates are going lower, and also saw the US dollar head lower. And that's probably a theme that's going to stay in play for the next few months. Of course, there's been, a pretty recent shock with the Middle East, and there's always a possibility that we could see some flare-ups again there, but hopefully not, of course. So yeah, there's that. But also, it only takes a little bit to see the Kiwi kind of get knocked back down to that 58.50 level. Even in the last week, when we've seen heightened volatility, the Kiwi just held ground quite nicely, just shy of 59 on the whole. So we're seeing that as, indicative of there being some good strength in the Kiwi and some pretty solid support. We do think that the 55.50 is the low now. So probably won't see that again for a while, I don't think. So on the whole, around 60, there's a few downside risks, but at the end of the day, I would pick it more upside for the time being.
I think we have the same view, don't we? Similar to that.
Yeah, absolutely. So I agree with Mieneke, right? We're probably going to trade in quite a range from here. If the new low is 58 or something, then we might get down there, which is good for exporters. And then I think if Mieneke's right and we punch into that 63 space, then that's quite a different dynamic. I think we'll factor in, I think, even weaker imported inflation in that world. That kind of hurts exporters, but they're getting quite high commodity prices, so they'll kind of wear their way through that, I would imagine, and it would be helpful for importers, but it would be deflationary, right?
Yeah.
When you run that through the model.
Yeah. When you've got a stronger exchange rate, yeah, that's exactly what happens.
Yeah.
Okay, I guess in moving across the ditch, what are we thinking on the Kiwi Aussie cross? Is it still like watching paint dry?
I'll be honest, it is still a bit like watching paint dry. So in the last couple of weeks, for example, we've traded in a fairly tight range between 92.30 and about 92.90. We have seen a little bit of a move out of a trend, but that was really at the start of the year. So I think we bottomed out around 90.80 and then got up to a high of 93.88, and that was driven off the back of the change in tone from the RBA, which suddenly kind of turned more dovish and started being more serious about cutting rates. And meanwhile, the RBNZ is seen as a little bit more hesitant, I would say the word, around cutting. I still think that there's room for them to cut further, but they're just being a little bit more cautious. And that dynamic between the interest rate differentials seeing the Kiwi kind of get a higher footing again. But we are struggling to crack the 93 for now. And I can't see it really moving very far outside of that range in the very short term. But once we see perhaps some further action from both RBA and RBNZ, plus a few other, key economic fundamentals come into play, then we might see a bit of a push higher. I would say on the whole, it would be gently to the upside view from my perspective. So around that, 93.40 plus, but I can't really see it having a crack above 94 or anything like that anytime soon, personally.
So just rapid fire. Kiwi dollar, we're sort of trading sideways at around 60 with upside risk. Kiwi Aussie, again, upside risk.
Slight upside risk.
Slight upside risk. And where's the downside? So Kiwi Euro, Kiwi Pound?
Kiwi Euro is looking a little shaky, if you will. Again, that would tie into what I was saying earlier around the euro benefiting from a lower US dollar as well. So we're currently sitting around the 51.70 level. We really have struggled to get above 53, which is now a key resistance level. So there's potential downside there, down to 50, below that 51.30 level, and then down to 50. I think that on the whole, in the current environment with the current sentiment, that is the more likely outcome. But otherwise, should we get a bit of a recovery, the first level to watch there's around 52.40 and up to 53.10. But again, there's a lot going on. Again, it's a bit of a dollar story linked to that, even though it's Kiwi Euro, it's still partly a US dollar story.
Yeah. And what about pound? Because pound's not as strong.
The pound is not as strong when say compared with the euro. But yeah, we have kind of struggled to get around above 44 through 45. There's some downside risks there for sure. The 42.80 level would be your downside test from here. There's things going on with the UK economy as well, though. So while we've seen a bit of pound strength, again, I would attribute that more to dollar strength. We've seen some pretty poor data coming out of the UK. Their unemployment rate is lifting, wage pressure is heading lower. The tariff situation, while I've got an agreement with the US, we've yet to see the details around that. So there's still plenty of downside risk for their economy. So I wouldn't be super bullish on the pound at this point.
And do we need to talk about yen? Kiwi yen?
Yeah, Kiwi yen. Again, that was more of a story probably 6 months ago. But yeah, Kiwi yen sitting around 87.65 at the moment. Potential, I'd probably cap the top side on that around 90 for now. Probably there's possibility of heading back towards that 85, 86 level as well. You've got the Bank of Japan likely hiking rates, but there's lots going on around there as well, especially if you're keeping an eye on the Japanese bond market, which you probably know a bit more in detail than I do, JK. That has been in the headlines of late.
Yeah, similar story. We've seen quite a lift in their back end in Japanese yields. So it's one of those things that you kind of look at it and go, wow, that's quite a move when you consider where Japanese interest rates have been over the last 30 odd years. So yeah, no, it's interesting whether that inflation is actually sticky this time is the question, right? We've seen inflation lift in Japan in the past, but it sort of drops back quite quickly. This looks like it's a bit more lasting,
Yeah, persistent.
And there was another currency you were going to ask?
There was. The other author of the FX Tactical, because it's such a hard tactical to write, is away on holiday in Bali, which I know, Mieneke, you were in Bali not too long ago as well. How is the currency? How is the Kiwi? Yeah, she's trying. First of all, it's called the... Yeah.
Indonesian rupiah.
Yeah, there you go.
Yeah, I love these curly questions. I think it was last time you asked me about the Polish zloty.
Oh yeah. We went as far as just how to pronounce it.
Yeah. Kiwi Indonesian rupiah. I mean, I guess what you really need to know is that, the Kiwi dollar still has plenty of buying power in Bali while you're on the ground. And my holiday it feels like it was, 6 months ago. It was really only a couple of months, but here we are in the middle of winter. So I don't really have any comment on Indonesian rupiah at this point. If you're looking at the wider Asian bloc, it's probably performing somewhere in those levels.
Yeah.
Yeah.
Maybe if Wilkie comes back with a full wardrobe and everything, then we know that the Kiwi's pretty strong.
Maybe you can get him on next time and ask him, but don't tell him, obviously.
Exactly.
Okay, I think that's it for this episode. Thanks so much, Mieneke, for coming back on and talking more about currencies and helping us trying to, navigate this world, which seems a lot of question marks are being thrown up, but obviously lots to always keep an eye on. What's happening overseas especially seems to have the most influence on the Kiwi dollar. But yeah, that's it for this episode. Tune in next time. Please like, review and subscribe.
You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.
Any views or information shared in this podcast, while given in good faith, aren't necessarily the views of Kiwibank.